Hi, I am Anna. I come from www.ntvforex.com. Week ahead focus remains on virus spread, fiscal stimulus, rebounding data, and earnings. http ntvforex.com News ID 4E0752. 7/19/2023 14:13 p.m. Country: U.S. The focus in the U.S. stays with the coronavirus response, reopening process, and sluggish economic recovery. COVID-19 continues to batter the Sunbelt, and that is starting to derail the economic recovery. Much attention will go to California and their recent restrictions, which will hopefully slow the rapid spread. Americans need to show signs they can change their behavior, otherwise, the revival of the economic recovery will stall even further. Earnings season will also be closely watched, as corporate America will likely need to downgrade their outlook and as the risk for job cuts grow. The recovery was not as quick and strong as hoped, and businesses may be forced to shrink their labor force. Key updates will come from Microsoft, IBM, Lockheed Martin, UBS, Tesla, Novartis, Unilever, Twitter, and Coca-Cola. U.S. politics. President Trump's new re-election strategy will likely go strongly on the offensive against former VP Biden. Trump had to shake up his campaign after a disappointing rally turnouts and abysmal polling numbers. President Trump will likely remain on the offensive with the rhetoric against China, and that will see a tit-for-tat response. Democrats are eagerly awaiting former VP Biden's decision on his running mate. Prior to COVID-19, the Democratic National Convention was originally scheduled in July, meaning we should have found out his decision by June. Since the convention was delayed till August 17, he will have more time to evaluate his candidates. Biden will turn 78 a few weeks after the election, so his VP selection will be critical for many voters. EU leaders will hopefully finalize their historic stimulus package, solidifying the strength of the Union and providing a strong bid for European assets. On the data front, close attention will be paid on Friday's flash PMI readings. Europe is faring much better than the US with COVID-19, and expectations are growing for their economic rebound to outperform. UK. The British pound could start to feel heavy, as Brexit negotiations will unlikely see any immediate breakthroughs on which trade agreement to seek. Brexit will need to show some progress by late September, but some investors may want to abandon their sterling bets. Excessive weakness for the British pound seems unlikely, as the UK economy is starting to look more attractive than the US, as the UK has several promising vaccine candidates and their fiscal response has been stronger. Russia. The Russian ruble could be vulnerable to some pressure with a correction in oil prices, and since the Bank of Russia has room to cut rates further due to inflation running below their target. South Africa. South Africa is expected to cut rates after inflation fell below the target range for the first time in 15 years. The SARB has noted they expect inflation to remain low over the next quarter and may not signal additional cuts unless inflation drops more strongly. The rand continues to benefit from the broader emerging market rally, which will likely take its cue from China. China. Ongoing geopolitical tensions with the US, although the market appears to be building herd immunity to developments from both sides. China loan prime rate decision Monday, the highlight of a dull data week. Hong Kong. Danger of increasingly stringent lockdown conditions hampering economic activity as COVID-19 cases reappear. Ongoing fallout from security law continues. Yet to see mass exodus of multinationals, but it is a multi-month evolving situation. China decided to tax PRC nationals globally at national rates, seen as a blow to the SAR, possible mass returns of PRC nationals. India. COVID-19 cases continue skyrocketing. India is now in top 4 for infections. INR remains under pressure as stress on the government budget and banking sector continue. Very real possibility that India will repeat Indonesia's recent playbook, and get the central bank to directly purchase new government bond issues. Negative currency and stocks. No significant data. Australia. Australian dollar range trading. Stock market holding steady as COVID-19 localized to Melbourne environs. Danger of impact to fragile consumer sentiment though. China relations continue to deteriorate. Unlikely to escalate to barring mineral ore or major agricultural exports, but an increasing risk. Japan. USD JPY range trading. Equity markets holding near highs. Trade balance and PMI are expected to confirm Japan remains in recession. COVID-19 cases are increasing in Tokyo, but the government is refusing to declare an emergency, causing disquiet amongst domestic investors. Markets. Oil. OPEC did the right thing, but it's a whole new ballgame. The decision to taper production cuts gives them some room to maneuver in case a second wave of the coronavirus forces a return of lockdowns that will shock crude demand. Oil prices are slumping as the global economic recovery is threatened by risks of new closures and as U.S. unemployment remains high and China's consumer struggles to bounce back. WTI crude remains trapped in the low $40s, but that could break if the slow labor market recovery is not met with a strong fiscal response next week. Right now, oil prices will take their cue primarily on demand headlines, which means it's all about coronavirus lockdowns and travel restrictions. Gold. Gold's slump may turn into further weakness tentatively if risk aversion continues to drive the dollar rebound. Gold prices fell after U.S. retail sales beat forecasts and on President Trump's comment that he would not sign the next COVID relief bill without a payroll tax. It is widely expected for the U.S. to see another fiscal stimulus package, but Trump's comment threatened the immediacy of one passing. Gold's fundamentals still support the climb to record high territory, but in the short term prices could see a retest near last week's low. Bitcoin. Bitcoin and the entire crypto space are selling off as investors question the safety in dealing with cryptocurrencies. Yesterday's Twitter hack was a great reminder of how vulnerable cryptocurrency traders are to hacking incidents. Malicious activity has always been a concern for Bitcoin, and those concerns are not going away anytime soon. Despite the selling pressure, Bitcoin is still respecting its 2-month trading range. Wednesday's Twitter hacking incident will likely not derail institutional interest, as many crypto experts believe that blockchain technology is needed to enhance security efforts. Subscribe our channel to receive the news as soon as possible. Thank you for watching.